So the GDP dropped in Q1. Yeah. And I want to share with you a basic lesson in economics here. All right. So before you start flipping out about a recession, all that, look, I was saying a couple months ago that we're probably in a recession already. We just don't know it yet because recession is not one, but two consecutive quarters of a contraction. And now we have one quarter in the books. We'll see what happens to quarter two. I would think that we're definitely in a recession now because I'll share with you why. And why that's not that big of a deal. Look, and this isn't to minimize people who are hurt. People are hurt in growth too, though, by the way. People are hurt in flat lines. People are hurt in recessions. People are hurt in depressions. People are always getting hurt in economic cycles, business cycles through the corporatism that we live in, certainly not capitalist, or the communists. There's always people getting hurt in cycles of markets, believe it or not. It doesn't matter. It's just our system is best. It'd be better if we didn't have a fascist corporatist takeover of the entire U.S. government, but be that as it may, it is what it is, and this is the reality that we're living in. So everyone and their mom's freaking out about a recession coming, not recognizing that a recession has to start someplace, and it started basically in January, if not earlier. But we know Q4 of 2021 was not a contraction, thus that was not a recession. But I think we're in one right now. But frankly, it matters not. It's a couple things. Already price into the cookie here. Price has already been baked in. And two, I'm going to show you why the economy contracted. And you're going to say, oh, it's not that big of a deal. All right, so right here. Here we are. That's a recession right there because of shutdown, not because of COVID, but because of government insane reaction to it, which was President Trump. Oh, yes, when he gave the mic to Fauci and Birx. And here we are right here. So the economy fell at 1.4% in Q1, and that made everyone go, oh my goodness. Now, this is where stock market investing is kind of weird too. So what happens, generally speaking, is a lot of the markets will say, hey, that's pretty good. That means the Fed will probably stop raising to the extent that we're like, what's the guy from St. Louis, Bollier, says, we're going to raise Fed funds rate to 3.75. Not going to do that if we're in an economic contraction, just not. So they'll probably raise a couple more just to to show people that they mean it. But that might be the end of the raising. We'll see. I haven't paid much mind to it. They're not going to raise during contraction. Not going to happen. It never happens like that. Will that stop a contraction? No. Will it stop inflation? No, because the Fed doesn't have control. I've said this 1,000 times. All right. Real GDP declined at 1.4% annual rate in the first quarter, well below consensus was expected growth of 1%. All right, so does this mean the Federal Reserve has already gotten tight? No, it hasn't. We believe recession is eventually going to happen. I actually think we're in it right now. Anyway, so we're going to talk what happened to cause the contraction. Ready? So why did the GDP drop in Q1? A host of factors that are probably temporary. First, a massive surge in imports, which resulted in a drag of 3.2 percentage points on growth. A massive surge in imports. What causes a massive surge in imports is a growing dollar, a more valuable dollar relative to other currencies. That's what causes a massive surge in imports. That is why the economy in the United States, the way they measure economic growth is a lot of ways it's kind of silly because you're sitting there thinking, all right, so we are buying goods that are now cheaper from foreign countries. And we've been doing that for a long time. A long time. Japan just comes to mind. The yen is in a free fall. Chinese yuan's in a free fall. Probably not as well. We can look. But anyway, be that as it may. When our dollar grows, increases value relative to other goods in other countries, those goods become cheaper for us to buy. That means they are subsidizing us. They are subsidizing us in our consumption. Now, there's a problem with that. I'm telling you, I've said this before. We can't consume everything that's made overseas. We can't. We have to make some stuff here, even if it's going to be more expensive. But that's kind of like the yin versus yang. What's the fine line there? I don't know. Things like steel we should do here, even if it costs more. But the day-to-day stuff, this right here just became cheaper because the dollar is more expensive relative to foreign currencies. If you travel to Europe, it's going to be cheaper. If you want to buy a second house in Canada, it's going to be cheaper. All these things are cheaper. If you go to Mexico, it's going to be cheaper. In fact, we went to Mexico. We got rooked. I didn't know this because I don't pay much mind, but we were in Cancun. We bought this necklace off a guy. He gave us a 10-to-1, 10-to-1 peso to dollar exchange rate. It turns out it's a 20-to-1. I guess it was 10-to-1, basically at the end of last year. So the exchange rate has dropped. Well, for them, has dropped 100%. For us, has increased by 50%. So I basically paid him double what I should have paid given today's current exchange rate. I wasn't prepared. I didn't know. I said, okay, looks nice. My wife liked it, so let's buy it. And he said, yeah, it's going to be whatever he said. I forgot what it was. I said, and then later on, I said, oh, man, the peso was actually 20-to-1. And he was quoting last month's prices at 10-to-1. I'm a fool. I got suckered. Oh, well. Be it as it may. But it's funny because the dollar goes up in value. That dollar can buy more stuff that is valued in pesos. That dollar can buy more stuff that's valued in euros. That stuff can buy more stuff that's valued in Japanese yen, Chinese yuan, Canadian, what do they call them, loonies, whatever. It's more Australian dollars. It's just that simple. And thus, our dollar is sent overseas to buy stuff that we bring in the United States today, and that's what the contraction happened, 3.2 percentage points. Now, this is just the first quarter, and I was just reading you right here. The strength is right here. I want to show you something right here. The strength of the dollar, and this is what kind of ticks me off. The strength of the dollar is also a result of weaker currencies. Exactly. Well, okay, but then they talk about the government or the GDP numbers contracting. It was down 1.4 versus consensus of 1.1. The surprise was exacerbated by widening trade deficits, reflecting supply chain problems no, he doesn't say anything about this. The surprise was exacerbated by widening trade deficits, reflecting supply chain, as well as lower private inventory and fading government stimulus. No, it's because the dollar is this. I don't get. They just literally wrote right here. In fact, the greenback has advanced 7% since the beginning of the year. It climbed another 1% just yesterday. It's the weirdest thing, man. I don't understand how they don't make that. It's crazy. Anyway, so the dollar, let's take a look. Here's the dollar index. It was at 98.63 at the beginning of this quarter. It's at 103 right now. I mean, what's that, a 5% increase roughly in just a month's time. The dollar's gone up by a 5% in a month's time. Remember, year to date, this first quarter right here, January till end of March, is when the contraction happened. And the dollar started right there at 96 and it ended the quarter at 98. So the dollar did rise, but not nearly as much as it's risen already. It's already rising like that, which means if we go back, I guess I lost it, but if we go back to Brian Westbury at First Trust Advisors, he said the surging imports reflected 3.2% off of growth. Well, that was with the dollar only going from 96 to 98. Now it's at 98 to 103. What's it going to be this quarter? It's going to be a huge continue we're buying stuff of imports. Excuse me, I'm drawing a blank of imports, which is only going to reflect more decline in contraction. Thus, it's recession. Is that a bad thing? No, if you're buying stuff, it's not. Now, again, there's a fine line here. There's a balance beam, man. You don't want to have everything relying on imports as we've been for 40, 50 years. But then on the other hand, you don't want to be like Japan either and have everything relying on exports. Because then people think they can devalue their currency. And it's just this end of cycle. We're going to devalue. They're going to devalue. We're going to devalue. They're going to devalue to increase exports. No. So the United States, because we're the only game in town in the world economy, what we should do is try to keep that fine line. We want to increase imports, right, by making the dollar strong. That's good, dudes. I can't. The Economics 101. Our dollar is worth more. That means those goods that they build overseas are worth less. We can buy more. So we buy more. They are subsidizing us. We aren't subsidizing them. We send them our dollars for their goods. All right, so we have the goods, we send them our dollars. That's a trade account deficit. Everyone's like, oh my goodness, a trade account deficit. Well, they now have our dollars. What do they do with those dollars? They invest in our own bonds, our government bonds. Or they'll use those dollars to trade other countries like that, which keeps our dollar even stronger. They are subsidizing our consumption. That is a fact. That is a fact. If you want to continue to consume, you want a highly valued dollar. If you don't want to continue to consume, you want to subsidize other countries' consumption, you want to weaken the dollar. So that way you can make more goods here that we can sell to Japan and freaking Portugal and whatnot. That's not the economy that's going to happen for the United States because we're too big. We're too strong. And I hate to say it, but we've lost a lot of skill set in terms of doing that for cheap labor. It's never coming back. It's not. So we're going to have to, now again, I'd like to get some things built here, I mean solar panels, but that's not happening either. And so I don't have all the answers. I'm just telling you, economics 101. When other countries are subsidizing our consumption, they're doing it by weakening their dollar, and which strengthens ours. And that's a good thing. We want a strong dollar. They send us goods, we send them dollars. They take those dollars. What do they do with them? They usually buy back our bonds to stabilize their own, so they can get a decent interest rate because our interest rates are higher than any place else. Or they'll use that own currency, our dollars, to circulate throughout their countries, which keeps our dollar in high demand too. It's a good thing. Again, you can have too much of a good thing, but this is not a bad thing. I'll tell you right now. All right, love your thoughts. We'll see you.